Imagine a world where every dollar you invest fights climate change, champions social justice, and lines your pockets in the process. Too good to be true? Stick with me, because in the next 10 minutes, you'll discover how sustainable and ESG investing can turbocharge both your wealth and the planet's future, and the one deadly mistake that could turn your green dream into a financial nightmare. You're a young hustler in the US, hungry for both impact and profit. You've heard ESG is the next big thing, but you also know greenwashing stories are everywhere. Today, we'll cut through the noise, 3 winning strategies and 3 hidden pitfalls, so you can invest with confidence, urgency, and real-world returns. Let's dive in, starting with strategy number 1. Thematic ETFs let you zero in on clean energy, green tech, or social equality, all in one trade. Last year, one popular clean energy fund surged nearly 40%. If you jumped in at the start of the year, you'd be chilling on a beach in Bali with those gains. Don't let the next wave pass you by. And no, I'm not telling you to invest in solar-powered flip-flops yet. But before you buy, watch out for an ETF trap that could melt your returns. Over 80% of so-called sustainable funds exaggerate their green credentials. That's like buying a vegan burger loaded with dairy. One fund touted as carbon neutral was still heavily invested in oil giants. Who knew sustainable could mean, I'll greenwash you if you let me? Stay tuned, because later I'll share a quick trick to sniff out greenwash in under 60 seconds. Now that you know what to dodge, let's power up with strategy number 2. You don't have to be a billionaire to hold companies accountable. With just 100 shares, you can vote on climate proposals at annual meetings. Platforms make proxy voting easy, so exercise your power before the next deadline. Yes, exercising power is easier than doing 10 push-ups, though both give you muscle. But beware, pitfall number 2 can silence your vote unless you know this insider hack. Up to 30% of retail investors never cast their proxy votes, literally leaving money and influence on the table. A missed vote on a major plastics reduction proposal cost investors billions in unaddressed environmental risks. Is ignoring your proxy like forgetting to pay rent? Kind of. Keep watching. Pitfall number 3 will expose the biggest ESG myth that even pros still buy into. Time for strategy number 3. And then the grand finale pitfall. Impact bonds link your returns to real outcomes like funding affordable housing or clean water projects. Last year, the social bond index returned over 7% with measurable progress on poverty alleviation. Who knew doing good could also look good on your brokerage statement? But watch out. That number 1 ESG myth lurking in plain sight is coming next. Overconcentration in ESG themes can backfire when one sector tanks. Remember the solar bust of 2023? Balance thematic bets with broad market ESG scores. It's like eating only kale. Great for health until it gets old. And here's that 60-second greenwash test. Scan a fund's top 10 holdings. If more than 20% are fossil fuel names, red flag. You've got the tools and the traps. But how do you tie it all together for explosive, lasting returns? You now know. Thematic ETFs can skyrocket your gains, but only if you dodge greenwash. Proxy voting lets you flex real corporate muscle if you actually cast your vote. Impact bonds deliver measurable change when paired with diversification. Mix these strategies, avoid the 3 pitfalls, and you'll build wealth and make a difference, urgently, authoritatively, and sustainably. Investor must build next. You'll want to watch my video on how to build an emergency fund in 2025. It's everything you need to protect your gains when life inevitably throws curveballs. The future of wealth waits for no one. Let's go.